Right. Hi friends, Bitcoin prices are looking pretty good, are they not, at this $59,000 price point here that we're at, 59,300. Well, we could be looking at a really good buy coming up here for the next test up, and there's a little couple of reasons for why we might see a little bit of a pullback just here for us to get that special buy. If you want to know what that is, then be sure to stay tuned. If you just want to have the very broad strokes, there they are, ladies and gentlemen. Potential wedge for us could be going up towards 64k, could be going down towards 55. Let's just look at that in a bit more detail so that you make money trading in these Bitcoin markets. Thanks so much for joining me. My name's Rocky Outcrop. Live show right now, by the way. You just got a quick glimpse of that. Join me for a live show sometime. And be sure to drop me a like and a subscribe if you get value from this video, okay? If you don't get value from it, that's all good. That's all good. If you do, then a like really goes a long way to saying, to other folk that it's worth watching. And it would be great if you did. I'd really appreciate it. Okay, cool. So this is the broad strokes that we're looking at. Is this price action here in the daily time frame in this zone in a wedge type shape? Well, it could well be, and therefore you'd be looking down towards those lows at about 55 and the highs at about 65 if we range within it. There's a couple other things I actually want to point out before we kind of crack on with the detail of where we could be going. And that's, I want to say that this could also be a shoulder, a head, and a shoulder with an upward sloping neckline. It does look very wedgy. It does look like, there's that potential for us to be seeing the prices, of course, have a retrace. And the target that you'd be looking for, if this was a head and shoulder, would be between the head and then the neckline, which is, of course, sloping towards the top side. And that's, of course, tantamount to the exact same sort of thing here, measuring between these two areas. So, looking between this for the measured move, where it could take you down to would be our yellow serrated line down there at 40,000 if we were to go the whole way down. That's right, bit shocking because it's the logarithmic chart, etc., and that's a big move towards the downside. So that's where it could go if we were to break outside of this, right? So then, of course, be aware of your fake out territory. Big number for you if you're managing risk with a view towards that is going to be 54,500, right? Lots of reasons for that, but we'll not break those down too much because it would take too long. It's out with the scope of this episode. Where we're actually looking for with a move, if we do get to push on outside of this little bit of a wedge here and it breaks towards the top side, is $80,000. That's right, you heard me correctly. $80,000. Well, $80,000. Right, so that would be that. Trading within the range, a lot more sensible at the minute because, of course, this is a negative pattern, and this could break either way. But let's just zoom on in a wee bit down the way towards the smaller time frames. Actually, just before I do, I'll just bring up this sort of quick Fibonacci retracement point for you to be aware of that we're at here at the 786. We're above the 618, and you could manage your risk accordingly, I suppose, if you're trading between these zones right now with a view towards 57k. Right, but anyway, going in towards the smaller term time frames, that's the 4 hour that I've brought up there now, and now I'm popping on the moving averages. And I just want to point out that if we do see a small cross here between the 8 period exponential moving average, that's the yellow one that I've got on, and the 18 here, just two smaller term moving averages crossing over, could see the prices actually descend down the way. And in fact, this little area that we're in right here at the end of this period itself is in fact in and of itself kind of wedgy. So if we just draw on the dynamics of this one, what we're seeing here is that between these lows and the highs within this range overall here, that there's actually a fairly decent sort of discount for you if you're looking to trade this with. Obviously it's somewhat slightly risky in a sense, but if you're somewhat a bit of a discount there, and we're looking for a target of all the fives, really 5555555, and to be honest with you, I'd probably say it's more like 55,750 or so, or 56,000 would be your target here for your next best potential buy entry if we're looking for this to kind of play out like that. Now, if that doesn't actually change the market overall, market structure wise, the key thing to be aware of course, in this recent area is, of course, this little inflection zone just here, which lines up with the lower end of the wedge from the broader view, and of course places us right between the 50 simple period moving average and the 200 period moving average here. If we were to trade down towards that zone, you'd be looking to hopefully find support at that 200 simple period moving average on the 4 hour time frame, Otherwise, we could be, of course, looking for further continuation, which is when that number of 54,500 becomes super important again towards the downside. Now, if we do actually want to move towards the top side and we're looking for a decent trend and moves, I'd actually want to get into here at around about the 60,000 area rather than necessarily right where we are just now in terms of actually looking for this sort of breakout. I'd be looking for volume to come back in. It's hidden by my drawing tools. It's actually so low, the volume here, that of course that's being hidden so easily. And what we're seeing here as well is that between the highs and the small turn time frame, we've got all that bearish divergence. Now, if we actually, and across all these oscillators, all of them, they've got bearish divergence on them, right? And we're seeing a snaking around, you know, we could see this revisit the neutral line, etc. And that's when you start to get the idea of when we could get that move coming in here. Now, if we don't, then what we want to see here happen is to push on up past with a degree of momentum into the bullish control zone. And similarly across these moving averages, this is the MACD histogram here. So what we're actually going to need to see here is candles coming in, which have got a bigger movement away from the sort of the average than the previous set of candles have done, as in if we're looking here and we see, if I stick on the Bollinger Bands, just to give you the education about this facet at the same time, if we see the prices, you know, you need to extend out these bands a lot. They need to, is rather, if they're going to be operating in such a small range, then they need to either push past its previous highs and kick on towards the top side and expand it out and stay within the top side, or what they're looking to is the potential for them to fall down the way, which is where you get that earlier target of 57k coming in at. Okay, if you want to know more detail, by the way, I've got a really good, really solid live stream here today. Really excellent stuff. And I've also got an educational segment about moving averages here, which will really help you with the current price action and your longer term. You know, it's an evergreen video essentially, but it was made today with live price action. So you can kind of double down on that if you want to check it out. And I would recommend you do so. Essentially, that's what we're looking at